So, Jin, as always, it's great to talk to you. And now let's begin our interview.
Yeah, thank you for having me on. I appreciate it.
I know we've already discussed what
hmm
WidePoint does in our previous interview, but for viewers who may be new to the story, could you give us a brief overview of the company again? What products and services does WidePoint provide?
hmm
What kinds of problems does it solve? Just a brief overview.
Sure. We are the leading provider of secure mobility management. Um, and what that means is that we provide the solutions and services to help our customers secure, manage, and gain visibility into their mobility assets. And we help our customers secure their mobile assets using the most sophisticated and the most secure multi-factor authentication solution available on the market today. And that solution is implemented in all of the federal government agencies here in the US, including the Department of Defense, now the Department of War. And so we've been providing these solutions since the mid 1990s. And since that time, the solution has never been hacked and never been compromised. And as it stands today, it would take 140 years to break the encryption on this secure multi-factor authentication solution.
Very interesting. Now, WidePoint holds a very important certification, the FedRAMP certification. How important is this certification and why? And how does it create a competitive advantage for WidePoint? How has it helped the company pursue new contract opportunities, for example?
Yeah, so FedRAMP stands for the Federal Risk Authorization and Management Program. And what that means is that when you get this FedRAMP authorized status, that means you meet the highest standard for cybersecurity as prescribed by the US federal government. And so it took us little over 3 years working with the General Services Administration, GSA, here in the US. And it takes a long time to review all of the security controls of our system, even though our system was inside an enclave that's called the Fed Cloud, and all of the infrastructure that you put your software on has already been tested, but the software itself, the system itself, has to be tested, our intelligent technology management system. And so once you have this FedRAMP authorized status, that means you meet the stringent security requirements of the US federal government for data protection. What that allows you to do is to bid on contract that specifically requires that you have this FedRAMP authorized status. And more solicitations are coming out that is requiring this FedRAMP authorized status. One of the ones that really is one of the big catalysts for us, and there are three, and I'll mention those. The first big catalyst is that because of this FedRAMP authorized status, we were able to capture one of the big three mobile carriers here in the US. We captured their business. And the reason why we were able to do that is because this carrier, well, we'll call it the ATV contract, AT&T, Verizon, and T-Mobile, right? ATV. And so one of the big three contractors the cellular carriers came to us and said, our government customers are requiring that we manage all of their data with a system that has FedRAMP authorized. And we looked in the FedRAMP marketplace, and WidePoint was the only game in town. Would you license your software to us so that we can start to manage and white label your software and manage all of our customers' data using WidePoint systems? And we said, of course. And so we announced a contract through a press release. This was in November of last year. And this was a contract for $45 million over a 5-year period. And, so if you do the math there, it's roughly, $9.5 million, $9 million over, each year annually. And that contract has a gross margin of approximately 70% plus, which could translate to 50 cents EPS as we exit 2026 on a run rate basis. So that's catalyst number one. And that catalyst number one was we won that because we had the FedRAMP authorized status. Okay.
Okay.
Yeah. And so the second catalyst, which is our, the DHS contract, Department of Homeland Security, CWMS 3.0.
I was going to ask you about that.
Yes. And so this is a $3 billion contract that is being recompeted. We are the current incumbent on that contract, the CWMS 2.0. And that contract originally started out as being a $500 million 5-year contract. And because of the success of that contract, the Department of Homeland Security had to increase the ceiling on that contract by $254 million, making it a $750 million contract. And so now they're recompeting that contract. And instead of being a 5-year contract, they're making it a 10-year contract. And instead of being a $1.5 billion contract, so if you take 750, multiply that by 2 by extending the period of performance from 5 to 10, that would be a $1.5 billion contract. But they're making it a 10-year contract, and they're making it a $3 billion contract ceiling. So they're doubling the contract period of performance, and they're doubling the contract ceiling, right? Mm-hmm. One of the main requirements on that contract, on the request for proposal, was the FedRAMP authorized status, right?
Wow. So this certification opens a lot of doors.
It opens up a lot of doors because, cybersecurity, especially now in the mobile environment, is critically important. People are computing, they're connecting to their IT infrastructure from all over the place, from everywhere. And so you need to be able to secure that endpoint that is coming into your corporate infrastructure, right? And so that's what we help our customer do. Not only do we give them the capability to secure it with the most secure multi-factor authentication solution available on the market today, but we help them manage all of those devices. In other words, right from the time that they acquire the devices to the time that they use the devices to the time that they recycle the devices. We provide all of that visibility into our customers' mobility assets. And
so Jin, lots of questions. You said a lot of things, a lot of important things. So where do I start? Okay. Let's start here. First, WidePoint operates through 2 primary business segments, which are carrier services and managed services. Could you walk us through each segment and discuss their respective gross margin profiles? And also, I think I was reading your conference call, and I saw this new division. It seems device as a service. Yeah.
Yes.
So is this a new business line, or does it belong to the carrier services or managed services? What is the gross margin of it? Can you talk a little about that?
Excellent question. And so the device as a service is a new business model, which I will talk about a little bit. And now getting back to the carrier services and the managed services revenue streams, right? And so under the DHS contract, the CWMS 2.0 contract, which has a run rate of approximately $150 million per year, right? So if you multiply that by 10, you get $1.5 billion. In that first line of revenue, 150 million, approximately 80% of that revenue is carrier services. And carrier services, I want to be very clear here. We want to be very transparent in that the carrier services essentially carries a zero margin business, right? We do that as a convenience factor for our customers, DHS. And DHS is the only customer that we do these carrier services for. And what that is that we pay their invoices on behalf of DHS. So Verizon, AT&T, and T-Mobile, we manage all of these devices for Department of Homeland Security, and each of these devices come with data and voice service, and we pay their invoices on DHS's behalf. The other 20% of that $150 million run rate is what we call managed services, and that's gross margin of roughly 34, 35, mid 30s to high 30s percent gross margins. And so out of the 150 million, approximately 30 million of that is a higher margin, mid 30 gross margin business. Now, as you know, during the COVID period, over the last 4 or 5 years, the cumulative inflation rate in the US has been somewhere around 28 to 30%. We had escalators built in on the contract of approximately 3% year over year. There's no way in even close to the 28 to 30% inflation rate that was experienced the last 5 years. Now, how are we going to make that correct that issue? So in the proposal that we put in for the CWMS 3.0, we accounted for that increase, the inflation increase in our pricing, right? And so when hopefully we win the new contract, the CWMS 3.0, which is going to be replaced the 2.0, we should experience a little bit, more fair gross margins. So slightly higher than, the mid 30s in gross margins. That's the first part of the first tranche of 150 million. So it will still have, under the CWMS 3.0, it will still have the 150 million, 80% of it carrier services, and 20% managed services. Now, remember what I said was that contract is going from a $150 million run rate to a $300 million run rate, another 150 million on top. So if you take the 300 million multiplied by 10, that gives you the $3 billion contract value. The additional $150 million, we already talked about the base 150. The additional $150 million, I think the way you can model that is that it is federal government contracting, and it's going to be solutions-based, and it's going to have very little, if at all, any carrier services on top of that. What that means is, the way we've been modeling is the federal government contracts, you can experience somewhere between 8 to 12% in net margins. Okay? Net margins, right? And so, ease of math, let's pick the middle number and say 10%. 10% of $150 million run rate is approximately 15 million. We have 10 million, let's say 9.8, 9.9 million, let's say $10 million shares of outstanding shares. So that would translate to $1.50 as we exit 2026, potentially on a run rate basis, right? And so in terms of the carrier contract what we call the ATV contract, AT&T, T-Mobile, Verizon, that could potentially add 50 cents EPS as we exit 2026. And this CWMS 3.0, the incremental growth, the 150 million, could potentially translate to $1.50 on an earnings per share as we exit 2026 on a run rate basis, right? So we're talking, potentially a $2 EPS run rate as we exit 2026, right? And so that's carrier catalyst number one is the ATV contract. Catalyst number two is the DHS. Now, you asked about our device as a service solution, right? And so our device as a service solution is essentially outsourcing the management of all of these mobile devices for our customers. And what we're doing is that we are partnered with our partner CDW.
I was going to ask you about that too.
Yeah, so as you may remember, CDW was our partner on the decennial census 2020. And that was the biggest device as a service solution that was implemented during the decennial census 2020, where we ramped up we acquired some 700,000 plus devices, and we shipped them out to all of their enumerators. We acquired the devices, we loaded the software on there, we configured them properly, we provided the training, we provided the logistics services to send it all out to the customers, collected the census data, brought them all back, wiped all of the sensitive information off of the devices, recycled some of them back into inventory, recycled some of them, resold some of them to secondary markets. And we did all of that without losing a single device, without having a single device compromise, all during a major pandemic, right? During COVID, right? And so CDW said, wow, this is a great idea. We could offer this solution to all of our Fortune 500, Fortune 100 companies, right? And so what that means, what device as a service means is that for a regular, repeatable monthly fee, these Fortune 100, Fortune 500 companies would get everything that has to do with your mobile device, including the hardware and the software. And they're calling that device as a service, right? We don't own any of the inventory. We don't do any of the acquisition of the hardware or the software. This is exactly what CDW is known for. This is right in their wheelhouse to do all of the acquisition of the hardware and the software. What we do is we provide the software and the brains of the operation so that they can manage the device as a service, just like they did under Census 2020. And they're going to use their software to manage the entire process, right? And the gross margins on that business, a device as a service solution, it's going to be north of 60% gross margins. So add that to the $2 EPS earnings per share as we exit 2026. It could really boost our EPS, right? And these Fortune 500 companies, their staff size, the number of devices that under management could be 100, 200, 300,000 devices per customer. So it could be a huge deal. We are looking at closing. We have about 2 handfuls of customers that we have put our proposals in. Some of them are in the what they call the best and final stage, and so we're hopeful that we will win some of those as before we exit 2026.
Okay, well, WidePoint's gross margin could actually change completely, right?
Yes, absolutely.
For those who are looking at WidePoint and thinking, oh, this company has a very low gross margin, things could get pretty wild, actually.
Yeah, things could get really, really wild and improve for the better, right? Because we have this big, large carrier services revenue, which we always tell our investors that it carries a zero margin. So just forget about that, the 80%.
And just consider the other part of the business.
Yeah, just consider the other, so forget about the $120 million in revenue that we're getting out of DHS as carrier services. Now, the new solutions that we're implementing, the $150 million, that'll be high margin stuff. And then we got the other $30 million. So now we're talking $180 million. The higher margin stuff is going to be greater in terms of total revenue than the carrier services, which carry zero margins. So we're talking EPS positive. We showed EPS positive in Q1, and we're looking to continue that trend in Q2, 3, and 4. And our objective is to be EPS positive on a run rate basis as we exit 2026.
Okay, great. Now, coming back to the CWMS subject. So CWMS 2.0 was recently extended through the end of June.
Yes.
What are your expectations once the current contract extension expires? When do you expect the CWMS 3 award to be announced?
Yeah, we think that the decision to award who to award the CWMS 3.0 has been made. What's been holding the award announcement, is the current situation with the budget with DHS. And as you may have heard, DHS itself, what the government was shut down. DHS was partially shut down at the end of last year and beginning of this year, and then CBP and ICE funding was withheld. Since then, it was only been now 2 days. The budget for ICE and CBP was finally approved, passed both the upper and the lower chamber of Congress, and it was signed by President Trump 2 days ago. So we think that the award announcement should be coming soon. The DHS 2.0, the CWMS 2.0 was extended to June 24, 2026. So they would either have to make an announcement now, between now and June 24, or they would have to let us know that they're going to extend the contract. So if they don't make the announcement by 2024. With that said, our current DHS contract, under that 2.0 contract, our customers have already executed what they call task orders underneath that contract that goes out until April and May of next year. A lot of the task orders, a lot of the agencies, they saw that this contract award and the acquisition process were continuing to drag on. So in order, so that they were being proactive by issuing sort of task orders, which are small subcontracts underneath the big contract, task orders, so that it goes out until April and May of next year. And so even if there is a hiccup in the process, we should still continue to experience our revenue, for the next 12 months. But we are planning on them making a decision before the 24th of June. And the way the federal government likes to do it is to have these contract overlapping. So as our task orders expire under the 2.0, they'll start issuing task orders under the 3.0, and so that there's no gap in service.
Okay. And what gives you confidence that WidePoint is well positioned to win this contract? What are the company's key competitive advantages compared to other bidders?
Yes, excellent question. So we've already talked about the FedRAMP authorized status. And that was definitely a requirement underneath the CWMS 3.0 recompete. And in this,
sorry to interrupt you. Do you know how many companies are competing?
Yes, we don't really know exactly, and we don't know the companies that because this information is not shared with us. But based upon our intelligence, our business intelligence, we look through some of the questions that were asked during the RFP draft RFP process. As part of the RFP process, the government will give prospective vendors to ask questions about a draft RFP that they're about to release, request for proposal package that they're about to release. And then once the questions are received, the government will answer those questions. And the way and the number of repeated questions, we're able to sort of guess how many bidders there were going to be. And we are thinking that there's going to be, at the time, 2 or 3 additional vendors that would be vying for this work. And since then, we know that at least one of them dropped out. And we know that one of them recently got their FedRAMP authorized status. And so right now, as it stands today, there's probably 2 contractors that are bidding for this work. Right? If you look in the FedRAMP marketplace under the telecom management piece, you'll see that there's only 2 companies. That's us, and I won't name the other company. You'll have to do the work to go look them up. I don't want to give them the press. Okay, and so we had the FedRAMP authorized status. That was a big deal. And at the time that the RFP was released, we were the only company that was fully FedRAMP authorized. The other company was in the quote unquote in process. They recently announced that they had received the authorized status in February of this year. Right. And so I don't know exactly how that will play in to the DHS's decision, but I figured that we should get extra points because we were authorized fully. They also stated that the award was going to a company that has less than 1,500 employees. And so what that means is that, big businesses cannot come and bid on this contract and compete against us. Right. And so, and the smaller companies will have a hard time, getting enough past experience of the size and breadth and depth of the CWMS contract to be able to, really compete with us on this work. They also require that the company have a top secret facility clearance. Small businesses, not too many of them have top secret facility clearances. They also stated as a requirement that only the prime contractor's past performance could be used. I don't know how familiar you are with the federal government contracting, but in the U.S. contracting world, a lot of times small businesses will front for a big company, especially when the contract is going to be set aside for a small business. They'll get these large companies to be subcontractor to these small companies, and they use the big companies' past performance example references to bid on the contract and make a credible case. But in this case, DHS specifically says you can only use the past performance references from the prime contractor, from the small companies, right? And so, so it would be very difficult for competitors to make a credible case. They also made this award best value. What that usually means is that the government liked the incumbent contractor, and they don't want a company to come in and just lowball the bid to win the work, right? And so they made it best value so that low cost doesn't necessarily win the contract. Make sense? And they also make sure that they have the right company with WidePoint, and that the government's personnel don't like to take a lot of risk. Right? We've been working with the Department of Homeland Security for over 20 years. We are the incumbent on 2.0. We were the incumbent on the 1.0. We were the incumbent on the predecessor contracts. And in all of that time, we had excellent past performance. If you go out to cpars.mil, it's Contractor Performance Assessment Reporting System, CPARS.mil. And if you look there and look up WidePoint, you'll see we have great past performance. And we've been working with the Department of Homeland Security for over 20 years. And in all of that time, we've been modifying, enhancing our software. We've been integrating our system with theirs in order to replicate all of those integration points. To rip out all of those integration points and to replace that, it would take a long time to do, and a lot of software development and cost in order to do all of that, to replicate that. And that doesn't necessarily mean that they'll be able to replicate all of that. So that's a huge risk to the government. And so by making it best value, it really sets aside, it essentially exclude many of the competitors that could credibly perform on this work. And so we feel pretty good about our chances of re-winning this contract because we have excellent relationship, we have excellent past performance with the customer, and we're the least risk contractor that they have access to. So I'm not saying that it's a mortal lock, but I think that we are in the best position to win it.
Okay, I get why you have so much conviction. Now let's talk about MobileAnchor. What exactly is MobileAnchor? Is it a new product offering, and does it fit within your managed services segment?
Yes. Excellent question. So as I started out our conversation is that we have the most secure multi-factor authentication solution that is available on the market today. And if you go out to any of the federal government facilities, you'll see every one of the individuals carrying around one of these badges, or their clip-on and lanyards and so forth. And this solution is implemented in all of the federal government agencies, including the Department of Defense, Department of War. Now what we've been able to do is to put that same level of solution on the mobile device, what we call MobileAnchor, right? And it's the level of security that you have this on the mobile device. We're in the process of piloting it now, and this is a technological leap forward, ahead of our competitors. We believe that we are the only one that has this solution right now. They have a solution, our competitors have a solution where digital certificates are generated on the server and is sent over the air onto the mobile device. What we do is we generate the digital certificates, identity certificates, on the mobile device. That's a technological leap forward, and we believe that we are the only ones that are able to do that at this time. And it is a managed services, and it carries a gross margins of north of 70% in gross margins. So this is going to be a great solution that we're offering, and it's going to capture additional business in the identity management market against our competitors.
So actually, MobileAnchor is a division by itself.
It's a solution. This is all, essentially, it's a solution that we sell on a sort of almost a cafeteria plan, like a menu. So if our customers want to use their MobileAnchor and they want to use our mobility management solution, our digital billing and analytics, they could pick and choose which one that they want and what capabilities and what scope of work, right? But so the answer is, it is a separate solution, but it's an integrated set of solutions that we provide.
Okay, and how much can you grow this product?
Oh gosh, right now, essentially this form factor will never go away. Not that I could see at any time soon, but this is an augmented solution on top of your mobile device. Your card, right? And so the number of certificates that's been issued, every federal government agency and every employee and every contractor needs one of these things in order to gain access to the federal government facilities. So now we're going to essentially have the same number of credentials on the mobile device. Estimates somewhere, north of 10 to 12 million. I believe at last count, by OPM, the federal government agency, including all of the federal government agencies, Department of Defense, Army, Navy, Air Force, somewhere around 4.5 million credentials. That's only for the federal staff. Then the contractors is probably roughly about the same number. And so it's a fairly large opportunity. And so we're currently in the pilot stages now with the MobileAnchor. And hopefully we can roll it out to all of the people that are carrying one of these badges. And we can derive this level of certificate onto the mobile device, right? We don't have to go through the whole vetting process, because if by the virtue of the fact that you have a credential that's been issued to you by the government, we can now derive another credential that is compatible with this certificate onto your mobile device. And so minimal amount of work, and we'll be able to, hopefully capture a lot of the mobile digital certificate on device.
Okay. Jin, I had set up a whole set of questions, but you actually already answered all of them. So I'm frankly out of questions. Is there anything we haven't discussed today that you believe investors should be paying attention to? Any final thoughts you would like to leave with our audience?
Yes, there is one other item, and then maybe a closing. But the one item that we have in the works, again with our partner CDW, I mentioned the Census 2020. There is the decennial census that happens every 10 years, right? So the decennial
2030.
2030, yes, the 2030 is coming, and we are right now in the draft RFP stages. We will be teaming with CDW again, and hopefully we are the incumbents. We were the first team that was able to conduct the census using mobile devices for the first time, all doing electronics. And so we feel that we have the inside track for the 2030, and we will be teaming with them, and we'll be using the device as a service solution to be able to win that work for the Census 2030. Now, in closing, and
how meaningful in terms of revenue could be the Census 2030 event, right?
Census 2030, the 2020 revenue run rate was approximately $80 million to our top line. So this could increase our top line in 2030 by about 80 million. But of course, it's going to give us a huge ramp up, and then it's going to ramp back down, and then it'll ramp up again in 2040, and so forth. Right? And so hopefully it's a continuing, like a cyclical thing. And it's, as I said, it's going to be, pretty profitable. The last time we had the 2020 census, we had, I believe, $2 EPS in 2019, 2020. And so that should add to our current EPS and current run rate, right?
Okay.
And so as I started off our conversation in that Q1, we were EPS positive, and we see that continuing throughout 2026. And we're going to continue to improve our, financial performance from this point forward. We have materially completed all of our capital investments. And so as we capture new customers, we'll be that much more profitable, and our net income, our EBITDA, all of those things should experience, great, improvement in performance. And so there's one other item that I like to cover is that our stock price had a little bit of a run up here. I think our 52-week low was like $2 and some cents. I think today it closed at about $10 of that, $12 and something. And so I think that's an indication of our investors' confidence in our ability to execute, and our investors' confidence that we do have the inside track on the CWMS 3.0. And so hopefully, knock on wood, that we win the CWMS 3.0, and we'll continue to improve our financial performance. And I think that the share price will reflect, and our market cap will reflect, our truer market cap and our value to our investors. And so I look forward to announcing that we won the CWMS 3.0, and hopefully you can have me back and we can have another conversation on that.
It will be great. Looking forward to it.
Yes.
So Jin, any closing thoughts?
No, that's about it. I think, I thank you for, having me on, and always your support. And I look forward to talking with you again soon.
Okay. I will be watching your press releases, and
Okay.
let's talk again soon.
Sounds great.
Jin, bye-bye, and
Thank
see you
you.
next time.
All right.